I think I closed the
Good
window.
morning. I'm Kristen Vettraino. I'm joined with my colleagues and friends, Sean Humphries and Vaughan Zawadzki. And we're mortgage people, and we're here to talk about the impending rate announcement from the Bank of Canada. It's coming in 2 minutes.
Coming in hot.
Coming in hot.
We're going to be reacting live, right?
Yeah. So right now we all expect a 25 basis point reduction. I think that's the general consensus, but would love to see more, of course.
What do you? I think I don't think so, but what do you think, Vaughan?
Yeah, the big one is coming at some point, and we can get into some analysis about that after. But I think for the time being, for a number of reasons, they'll keep it conservative, but I think they'll cut.
Oh yeah, for sure. I just don't see them doing more than 0.5 or more than 0.25, 25 basis points.
Yeah, I think we need more bad news in order for that to happen. But I think that the bad news is coming. So we may even see that monster cut that we talked about before the year's over.
Yeah, we'll see. We'll see what happens. I think, before the end of the year, I don't know. I see a quarter point today, and it should be coming up now. I've got 9:45 here. Okay.
All right, let's check.
All right, let's.
We need some breaking news music.
Yeah, hold on. So let's. Oops. Now I can't put it on the screen. But anyway, the Bank of Canada reduces the policy rate by 25 basis points to 4.5%.
All right.
Live reaction. As expected, right? Like kind of a letdown at this point that it was only 0.25%.
Yeah, a little. So now the rate's 6.7, the prime rate. Yes.
Yes.
Prime.
Yeah, so it's now 6.7%. Let me add the ticker here. So 6.7%, and while the policy rate is 4.5, the bank of the variable rates prime rate is now 6.7%. What does that mean for people's mortgage payments? What do you got, Vaughan?
Well, I mean, let's say that you have a $500,000 mortgage on your property. Now with the second rate cut, you're looking at like $150 either savings back in your pocket if you have an adjustable rate variable mortgage, or if it's a fixed payment variable rate mortgage, then you've got $150 going back onto the principal. So, I mean, it is a significant change, and I think that a lot of people in this market have mortgages larger than that. So, like, let's say that you have close to $1 million mortgage, we're talking $300 a month now. And different. So you bore that pain on the way up, and you're finally starting to see a little bit of relief on the way down.
The press release talks about, like, pretty upfront in the United States, the anticipated economic slowdown is materializing. So we've talked a lot about the economy in the US being much stronger than ours, and the US is really keeping our rates up. But they're saying that while the economy there is starting to slow down, that's what we need to see in order to keep decreasing rates.
I mean, I think that overall, the interpretation of this, if you were expecting sort of a royal wedding style caliber event today, you're probably a little disappointed. I wouldn't even really call this like the royal engagement. If you had to compare it to anything, at best, this is the royal promise ring announcement.
What is it?
It's not all bad. You know, a promise ring says, "Oh, we may get a future king out of this."
Yeah,
but,
can you bring it back to
today,
holidays? What holiday is this rate announcement on?
So it's U.S. Thanksgiving last time. What is this now? Is this like Christmas Eve?
Look, we're still waiting for the Santa to come out on the Macy's Day Parade. You know, it's we know that he's there. He's coming.
So far, it's just been some mediocre parade floats. This is a mediocre parade float.
Yeah, the brass band is out. You know, we've heard the song before, and we're
cartwheels.
looking forward to the cartwheels. Exactly.
Have we seen any of the big floats, like the big floating ones? Are we just on the band and just a couple cartwheels at this point? Just
on
really
the
warming
horizon
up is what you're saying.
But you know what? The parade has started, and that's important. They didn't cancel it because of bad weather. Let's dig
That's
in.
right.
We're really into it. Okay, so what do we think about this and the impact on, we talk a lot about buyers feeling like they're on the sidelines, and that might be psychological and it might be actually monetary. I talking to some realtors, you'd really think they believe buyers are waiting for news like this. And so what do you guys think in terms of, like, is this enough news to get people to come out of their comfy dorms?
I don't think this is it. I don't think this is enough. I think this is just, chipping away a little bit. I think it gives people a little bit more confidence, but I don't think that we're going to see a huge, number of people all of a sudden go into the market. I think we're still, people are hoping for more. I think this is a bit of relief, but I don't think this is the sign that we've all been waiting for.
Yeah. We were, yeah, no, Vaughan, go ahead.
I think the
Fun,
spread
no
between the spread between the fixed rate and the variable rate is still too big. So as the variable rate moves down, we're still well over the 5.25 qualifying rate that we were 2 years ago. That's the material change that we will need to see. We need to see that qualifying rate come down. Maybe not as low as 5.25, but it's definitely going to have to come down in order for people to get access to more funds. So, there is the psychological sitting on the sidelines effect, but I think there's a real material change that needs to happen. But we're on our way there. So, the bank will continue to cut until we get some serious bad news. And I was reading a article published. It was research done by BDO and MNP, and they said 50% of Canadians, actually slightly over 50% of Canadians, feel like a big rate cut won't even help them out. So there's a little bit of desperation, and I mean it's a survey, it's a poll, but that sort of indicates that things might be worse than what they are. I think that the Bank of Canada does not want to induce another sort of feeding frenzy. So a big rate cut right now with a material change could trigger a market reaction that they don't want to happen with the housing market, because we still are in a housing crisis. There's not enough inventory. But eventually I think we'll wind up back there out of necessity.
So you're looking at that 5.25, like we need to get below that for the prime rate needs to get below 5.25 before we start seeing any sort of pressure or like buyers returning to the market.
I mean, when we look at that qualifying rate, it's 2% more than your contract rate, or a minimum of 5.25. What does that look like when we get, when that qualifying rate gets closer to 6? It's just going to give people more access to mortgage money, which is going to get the houses moving. I mean, we have the most amount of inventory on the market that we've had in the last 20 years. It's not moving, and I don't think that's just because people are waiting for their monthly payments to come down, because you can refinance your mortgage later. If you can get into the market today, I just think that people are forced on the sidelines because they don't have access to enough resources.
Yeah, I would agree with that. I think that people need to see the rates come down. They need to feel like they've got a little bit more money in their pocket in order to make a big move. I think people who are maybe could move, maybe are still living with family. I think we're probably not seeing as many natural household starts as what we would otherwise. Certainly we have people coming in from outside the country, and they're able to, those people probably are looking to rent and then to buy. But if you're on the sidelines, you're living at home, kids are living at home longer with parents and family. So I think that kind of has them stuck in this position until we get lower. It's interesting. 5.25, that is the stress test rate. We're already, like, a lot of our fixed rates are already below that. But if you add the 2%, we're qualifying much higher than 5.25. So, it's probably another percent or so before, like, we need another 1% before we start using that 5.25 as the stress test rate.
Yeah, I think once we're back in that ballpark, then that will absolutely stimulate the housing economy again, because that's where we were when things were crazy. So maybe the Bank of Canada. I don't know how many levers that they're trying to pull, or how many outside of inflation. I don't know what the Bank of Canada's objectives are. I think that it's on the back burner, that they don't want to overstimulate the housing market at this point, but eventually I think that they'll be forced to. I think when you mention outside money, we've had historic population growth, over sort of 2.1 million in the last couple of years, people coming in. I think those numbers, that wealth that comes in the country, covers up a little bit of the recession that we're in. So some economics are saying we're in a recession. Some economists are saying we're not in a recession. But I think that extra money that came in that we have to adjust to is covering up the real sort of situation that we're in, the actual recession that we're in. If those numbers were a little bit clearer to see, I think that we would have had a bigger rate cut today.
So what do you think? So I know we've talked about what's happening with variable rates. It's about the equivalent of $15 per month in every $100,000 in mortgage that you have. So if you want to ballpark at a $500,000 mortgage, you're getting about $75 back more into your pocket with an adjustable rate, or with a variable rate, $75 more going towards the principal to pay that down a little faster. What happens with fixed rates? I get this all the time. I'm sure you guys are going to get this question today. The Bank of Canada has decreased the policy rate. Is there lower fixed rates now today? Do you guys get this a lot?
Yeah, I mean, I think it's just such a pervasive misconception. This isn't going to have a direct impact on anybody's pre-approval rate hold. Those are all done with fixed rates. So yeah, no, it doesn't impact fixed rates, except that the information coming out says that it's anticipated rates are going to soften in the US, and it gives us permission to soften fixed rates here. So let's spread the word. This rate announcement does not directly affect your fixed rates, but it does sort of indicate a direction.
Yeah. It's good. Like, fixed rates are more speculative, right? Like, it's kind of a bit of a mind shift, where variable rates, they move more often. The fixed rates seem like they're going to be tied to something because they're fixed, but there's much more speculative. It's like, where is the policy rate going versus where is the policy rate today, which is the variable rate. If you move the policy rate, the variable rate changes automatically. The fixed rate has already priced in this rate change. I feel like I want to stand up on a soapbox and scream this. Like, your fixed rates will not change today because of the Bank of Canada's policy rate. That's the variable rate. And if you're in the market to get something, maybe you have a pre-approval, that fixed rate pre-approval is probably not better today than it was 2 days ago, because everybody expected that we're going to have a 1/4 point decrease.
Yeah.
I mean, I guess with that said, the fixed rates sort of on average did come down about 15 basis points after the last announcement. So it like they're connected, but they're not directly connected. It's more like a correlation than a connection.
Yeah, I was reading like it doesn't come down as much. The fixed rates don't come down as much when the variable rates come down. So they will follow, but you're more likely to see a much bigger gap forming now with variable rates coming down. The fixed rates will drag behind it. I think it's like you can expect maybe 0.75% for every percent in the variable rate.
Yeah, it's like you said, they're speculative. So usually by the time variable moves, fixed have already adjusted.
So we've got 3 more meetings, Bank of Canada meetings. Next one is September 4th. Then we've got October 23rd and December 11th. What's your over under so I'm going to give you a number. I want you to tell me if we have more or less rate cuts before the end of the year. Okay. So the number is 2.5 rate cuts. Do we have more than 2.5 or less than 2.5? Vaughan, I'm going to go to you because I think you get the betting concept right away here.
Yeah, I would say, I mean, all the way. So yes, we'll be over the 2.5. I'm betting the over, and I'm betting for a big one this year too. So I think we'll see.
You think we'll have more than 50 basis points in one meeting?
Yeah, it's the hardest thing for me to predict is the sort of the news cycle, or like how long it's going to take to unpack what the economy is actually doing, because it's sort of unprecedented. Like over 2 million people in the last couple of years. That's a big population jump and a big wealth jump. So you couldn't track that money like you could if everything was generated from your own economy. So it really depends on when that information becomes sort of hard and fast. But once it is, I think then we're going to see, oh, holy smokes, we've been in a recession longer than we thought. We better take a massive rate cut and get this economy back on track.
Kristen, what do you think?
I am not a gambling type of person. So I don't know, like that what
I bet you we get you gambling before the end of the year.
That?
We'll get you gambling before the end of the year. The Dumb and Dumber reference.
Yeah, I've got $25 on that. We'll get her gambling.
I mean, I know what I want to happen, but we just see what happens and then we adapt. And it sort of seems like the theme of the past while has been hold on. We're weathering the storm. The last 2 rate cuts coming in June and July have felt caring and lovely, and maybe a little too little too late, but I'll take them. And I you know what, I'll just say over. I think there will be 3 rate cuts.
Okay. Another way to think about it, can the Bank of Canada cut again before the US? So the US is meeting July 30th, September 17th, November 6th, December 17th. We have 3 more rate decisions before the US election, which some people have said, hey, we're not expecting there to be a rate cut from the US until after the election. I forget who said, that was me. I said that. But what do you think? Like, can they get too far ahead of the US? Do you think this is a factor? I know we've listened to some economists that have disagreed on this.
Mm-hmm. I think it was Sherry Cooper was like, we care more about what China is doing than what the US is doing. Maybe we should check out their numbers because we can probably comprehend them. So I think, no, we don't want to get too far away, because then our dollar is more worthless and everything is more expensive yet again. But I kind of feel like they would want to try to cut before the election anyway, to try to like make, the status quo. People might want to do that.
Yeah. I think we're at odds a little bit with, like, we all think that there's going to be 3 more rate cuts before the end of the year, but we've got this beast of an economy, the US, that is maybe on a slower pace than ours. And I think we need to be, even if we're disregarding that as a factor, I still think that that's a possibility that we cut again before them. But I wonder if we need to hold our horses a little bit with that. Do we see a bigger rate? Like, do we skip a meeting and see a bigger rate cut after we have more indication of what the US is going to do?
That's an interesting possibility. And I mean, I couldn't rule it out. I think we have some wiggle room. Like, as far as I understand, I think the Fed is at like 5.33 right now, and we're now down to 4.5. So as long as we're within that 1 percentage point spread, that's been my understanding of it's pretty safe. We don't have to worry about the Canadian dollar tanking. It's when we exceed that. So comfortably, we have another rate cut here to be, within basically that 1% spread of the US Fed. So I think, next opportunity, we can safely, another 25 basis points, and then we'll see what happens in the US. If the economy is softening, then they'll be cutting with us. Or if we're 6 months ahead or 3 months ahead, these are all lagging. All these indicators are lagging. So I think that we're in a comfortable position to keep slashing these rates down, and let's get some more money back in our pockets. Let's get some more money back in the economy, and let's get this housing market moving again.
Yeah, I think we need to see more rate cuts to even stabilize the Toronto real estate market. I think that we continue to see these rate cuts. I think that's less of danger now. I think, what we heard before is that, well, the Bank of Canada can't raise rates or can't decrease rates because we're going to get the real estate market going hot again, and that's going to work against the inflation. But I don't see that happening. I feel like that is dissipated so much. I don't see that being an issue anymore.
Yeah, it's funny that we used to be really concerned about that. And now
well, we had unprecedented growth in this market, and a lot of it came. I mean, I think that what we've learned from this is that the Bank of Canada and interest rates and interest rate sensitivity plays a much bigger part. I think that we've debunked the myth that people are sitting on the sidelines due to psychological reasons. I think that we've proven a point that the Bank of Canada can control this. I don't know that we necessarily want them to, but we came off of another unprecedented event of this, almost complete shutdown of the economy for 2 years, pumped full of government money to keep everybody's table full of food. So I'm not surprised that we've learned this lesson. It was the cheapest money that's ever existed in Canada, with our overnight rate at 25 basis points. We've never seen it that low. And we're going to come back to reality.
Should we end it there?
Yeah, this was fun. And congratulations to everybody who has a variable and especially who has an adjustable rate mortgage.
Absolutely. More money in your pocket for sure.
Yeah.
Okay, guys, thanks for joining. We'll see you next time. And join us on our Mortgage People podcast on
head on over
YouTube
to our
Music.
YouTube channel, like and subscribe.
See you guys.